Time to talk about everyone's favorite topic, crypto. Exciting stuff going on. Welcome back to Dean's List. Big news. This week, Bitcoin is surging to over $90,000. Have you noticed? I mean, if you're watching CNBC, reading the Wall Street Journal, and you're online looking at personal finance or investment sites, it's got to be right there in your face. So the real question is, why do I have this nasty pain right here deep in my stomach? Many individual investors feel FOMO in some shape or form right now. I'm not going to speak to the folks suffering from overconfidence today. Most of those guys are under 30 years old and they're going to learn eventually. But if your diversified portfolio is a mix of cryptocurrency, micro-strategy options, and leverage, and you've got a family, I highly suggest go to Gamanon and get a therapist, please. I want to talk to the group that suffers from loss aversion. Remember loss aversion? We talk about it in almost every video. It's hating losing 2.5 times as much as you like winning. We won't get off our butts and take action because we're afraid of losing. And I feel this way a lot. So believe me, I'm right there with you. What can I do when my mind freezes like this? I feel like it when I don't have the position that I want, meaning the stock or the crypto or whatever it is, the ETF. I've been watching it and I just didn't do it. I didn't buy and I meant to. And I also feel the same way when I have that position and I wanted to reduce it or remove it altogether. And again, I froze for way too long and did not take action, right? This is kind of the key to life, is taking steps in the right direction and not sitting on your hands. My solution is simple for all of us, for me included. Take a step forward. A baby step will do. It doesn't have to be big, but I force myself to take one step in the right direction. I break it into 4 or 5 pieces. So 20 to 25% of the decision that I wanted to make. And I can break it up into weeks, or we can break it up into months. You put the remainder on a consistent execution schedule, 3 to 4 weeks or months, like we talked about, depending on how aggressive you think you need to be, and you execute. But the important part is breaking each decision up into 4 or 5 bite-sized digestible pieces that won't make you feel as loss averse as doing everything at once. Now, let's talk about Bitcoin's halving cycle. Roughly every 4 years, the reward miners receive for validating transactions on the blockchain gets cut in half. This programmed reduction in supply is designed to mimic the scarcity of commodities, like gold, for example. But one key difference. So it's completely predictable. And the supply shock that follows each halving is a well-known event. I don't know why, but it seems to trigger massive rallies. I mean, anyone looking at a Bitcoin chart can see that roughly every 4 years, there's this parabolic thing that occurs. Now, 4 years ago was the wave of stimulus money. It was post-COVID and it coincided with a surge kind of past the $60,000 to the $70,000 mark. Now you got a Trump win and a lot of wins in the House and Senate for folks that support cryptocurrency deregulation. And we're again seeing history rhyme as Bitcoin is somewhere in the 90s, right? The 90,000s today. Now, why does this keep happening? If investors knew this pattern was so reliable, wouldn't they front run the market and erase the opportunity like they do with any plain old stock? Here's where it gets interesting. The halving itself is predictable. The timing and scale of external catalysts are not. So the halving acts as a fundamental trigger. It primes the market for a rally. But what sets the market ablaze are unforeseen external factors like regulatory changes or expected ones, macroeconomic shifts, major geopolitical events. Think of it like this. The halving is the match, but it's the surrounding environment, the fuel that determines whether you get a spark or a bonfire. I would call the election, the post-election results here, a bonfire. 4 years ago, that fuel was COVID-era money printing, and it created a perfect storm for Bitcoin to thrive. And it was a would-be inflation hedge. Did it really help folks with the inflation that would come in 2022? No, because by that time, crypto had cratered to a large degree. So there's a lot of false narratives around some of these labels that are assigned to crypto. I like to think of it as a commodity, not a hedge of some sort. So today, what's happening is a mix of political shifts and renewed institutional interest. All right, you see there are probably something like 5 to 10 Bitcoin ETFs out there today, and it's driving adoption. So no doubt hedge funds are playing in the space on a daily basis. Here's why no other asset behaves like this. Traditional financial assets don't have a built-in transparent supply reduction mechanism. Stocks, bonds, and commodities are influenced by supply and demand, but these forces are driven by factors that are difficult to predict. Company earnings, geopolitical tensions. Bitcoin, on the other hand, operates on a coded schedule. It's visible to every single person in the whole world. Makes it unique in its predictability. The takeaway for investors, Bitcoin's halving cycle is a fascinating phenomenon, not a foolproof trading strategy. Timing this market is incredibly challenging. The external factors that come into play and understanding the cycles, it does help you frame your long-term expectations. But if you're considering jumping into crypto now at these high levels, you got to ask yourself, are you prepared for some serious volatility? Do you have conviction to hold through a lot of noise and a lot of downside? Now, personally, I am always allocated 5 to 10% into Bitcoin and Ethereum. And I don't necessarily hold coins in wallets. I'm perfectly fine holding funds like ETH and IBIT. So I view it as a commodities allocation for myself alongside gold. And again, I hold it generally in single digit percentages. For folks in their 20s and 30s, I can see how based on this asset's performance over the last 10 or 15 years, you might want to hold a little bit more. Not going to blame you. But again, a commodity with this kind of history, it's getting harder to place that in the same bin as a tulip bubble. Gold is valuable because we agree that it is. That's it. What do I do if I think I'm underallocated? I take my time. I wait for pullbacks. They're inevitable. This high volatility thing, it declines 15 to 30% on a dime any given week. So be patient. Chasing this asset that can be parabolic, it's not a good antidote for loss aversion. I want to hear your thoughts. Do you think the surge to over $90,000 is sustainable? Do you think it's just another bubble waiting to burst? Drop your opinions in the comments below. And if you enjoyed today's segment, like, subscribe, and share. It helps us out a lot. Thank you for tuning into Dean's List, where we make sense of the markets so you don't have to. See you next time.